What's cooking, Gumbo Nation? Welcome to this week's Hump Day Holla. It's Wednesday. It's Ash Wednesday for all the Catholics out there. So get your ashes. Try to remember not to eat meat today as well as we start our 40 days of Lent leading up to Easter. So hope everybody had a fantastic Mardi Gras day. The weather here in New Orleans, in the city, really this entire weekend was absolutely phenomenal, James. So not to disappoint you over in Texas, where it was just Tuesday. Here we had a pretty nice party going down, man, and it was the weather was perfect. So good for the city, good stuff like that. Looked like they had some record crowds out there. Finally trying. I know last year we came back from the COVID stuff, but it looks like this year everybody's like, hey, you know what? I'll breathe other people's air. Let's rock and roll, right?
Yeah, well, yesterday here in Bug Tussle, what we did have is we had plenty of on-street parking that was easily found. So who's the real winner?
And nobody throwing up in your front yard or using a bathroom or anything.
Zero.
Yeah, so that's a good thing. So, hey, listen, want to get into this week, folks. Want to chat with you a little bit and just kind of keeping it real. Hey, what's going on, right? So, today, what we're going to touch on shortly is rate buy downs. If you've been listening to the show over the last couple of weeks, we told you why rates have sort of taken a turn for what we're not happy about. And let's just call it challenged. I don't want to say negative, but challenged, right? So, that's providing some opportunity. We're seeing a lot of opportunity. Buyers are coming through because they're understanding, you know what, even though the rates are a little bit inflated over where they were just 4 weeks ago, 5 weeks ago, people are still looking to buy. So what I want to revisit today and talk about is the importance because, James, we've got the free second look. We've got Snap, Send, and Save.com where people can go and look, and the listeners, the parents listen, the kids like to go off, try to do things on their own. Then when they realize it didn't work out the way they thought, hey, they reach out to us and we help them out. And one of the things I want to make sure that everybody listening understands this. There's a big difference between a rate buy down and a buy down of your discount points, right? So there's a rate buy down and then there's discount points. Well, when you've got people that are in this industry who got in when they were selling 2.5% interest rates, they don't know the difference. So they've gotten a little crafty on some things and they're calling them buy down discounts, all those things. Matter of fact, today in Gumbo Nation, I put a nice little graphic up there to be able to show you very quickly a snapshot of what the differences are. So I think it's important right now more than ever as we revisit this when you are out making an offer on a home, right? And again, this is why we love our realtors that we work with, those seasoned realtors. And when they're out asking for that closing cost, James, we won 3 contracts this weekend. Number one, because they all got the $5,000 guarantee, right? Because they were pre-approved. So that was number one. But the other reason was I had conversations with the realtors when we were going in to make the offer on what we need to do and what kind of buy down or what kind of discount we could get as far as seller paid closing costs. And we're able to make the loan work and make it a much better loan for the client buying. Remember, we're marrying the home, but we're dating the rate. So there's a big difference right now. So buy down, and there's different types, right? There's, first off, let me say this. What is a buy down? All right. A buy down, by definition, is you buy down the interest over whatever term that you take. You qualify on, say the rate's 7.5%, but you do a 1-0 buy down. You got to qualify on 7.5%, but for that first year, you get 6.5%. Okay. What does that cost? That cost is the interest. So there's different types of buy downs. There's a 1-0 buy down where 1 year you get 1 full percent off and it's the interest over that 12 months.
So is you're saying a buy down is where you sort of prepay the difference in interest?
The interest is prepaid. Here's the good thing. Look, the people that can sell it's the seller, the builder, or the lender, right? So that's the other thing you want to make sure that you're looking at too, right? If when the lender is selling you on a buy down discount, but it's coming out of your pocket, that's a discount. That's not a buy down. So the different types of buy downs are there's a 3-2-1 where 3 years. So if it's 7.5, your rate goes all the way to 4.5 for the first year, then 5.5, then 6.5. Then in the fourth year, it's going to the 7.5, right? There's a 2-1 where it's your first year, it's 5.5, then 6.5, then it goes to the 7.5, then a 1-0. And there's even a 1-1, James, where you take the interest, it goes down 1%, but that interest is calculated over, but it's for 24 months. Okay. So those are usually your most popular ones, is the 1-0, to be honest, right now, because people do expect the interest rates to recede, right? We know that is going to happen. And you're qualifying on the higher interest rate right now. But again, this is why we continue to talk on Mortgage Gumbo. Rates right now are temporary. Okay. So that's what's important. That number on a piece of paper is nowhere near as important as finding out that house that you're looking at. What is the insurance on that home? Right? Especially in Louisiana right now, where we're limited on that. What is the insurance? Is it in a flood zone? And then what kind of, with the program that I have and the home that I'm going to make an offer on, what is the max seller paid contributions I can get? Right? And not only what's the max, but what's in reality, right? We've got a client that looked this week, went and looked for a $340,000 home, right? And they're doing an FHA loan at 6%, James. They could get $20,000 in seller paid closing costs. That's not going to happen. That's not a reality on a home that's been on the market for 7 days. 6 months, maybe so. So what we did is we went in and made a full price offer. And I got with the realtor and said, in reality, all we need is 10,000. And that way, all our sellers got to come in to closing with is the down payment, and then everything else is there. So you've got to make sure right now, more than ever, it's how are we crafting these solutions? How are we putting these loans in play to where you can benefit? We all know the numbers on a piece of paper. The interest rate is nothing anybody's happy about. But right now, more than ever, I want to make sure that folks understand when you're looking at it, a discount versus a buy down is two different things. And plenty of times you could look at sometimes the buy down is actually cheaper than the discount, and you get a full price, you get a full 1% off versus maybe a 0.5%.
All right.
So that's what you've got to look at.
Questions.
Yep.
I have, when I got my loan through you a little over a year ago, I got some.
You bought a discount. You bought a discount, right? Because
mine lasts forever. I paid, and I didn't have to pay money when I sat down and closed. It was just tacked onto the back of the mortgage. So I wouldn't say like, why doesn't everybody do this? But why don't a lot of people do this?
So here's why. Number one, do you know if you're going to be in that home forever, or at least for the foreseeable future, 5+ years? That's why. That's the biggest reason, right? If you know, hey, I'm going to be here for 5 years or so, then yeah, let's look at it. But right now, when you're talking about taking a rate down from 3.25% to 3%, there's a big difference there from going my rate's 7 1/8 or 7.125 down to 6.125. There's a big difference because no matter what, James, it's going to take a whole lot. Like we've been discussing these 4Ds, divorce, debt, death, or distance. It's going to take a lot for you to sell that home or to refinance. We should talk more about. So the person that's buying now, they're going to refinance at the first sign of an opportunity. So let's take advantage of that 1 year, or if there's enough money in it to do the 2-year buy down, because then they don't have to worry about anything for 2 years. They could let what's going on the outside, all that stuff go down, and they know they've got 2 years where their rate's set in place and they're in a good position. But they're not trying to, you got to understand this, listeners. When rates are high, people want lower rates, and when rates are low, people want even lower. We get that at Mortgage Gumbo. But with that being said, we're fiduciaries. Our entire job is to make sure that we use that money wisely, because we respect and we understand how hard it is for you to earn those funds and earn those monies, right? So just because you have it, we don't want to use it, especially right now in today's purchasing environment. We rather use it when we're talking in a year from now when rates have receded, and then you know a little bit more of, hey, yeah, we're going to have this because life happens, right? And today it may be your permanent home, or today it may be absolutely no way. Life happens when we talk, when those rates recede, maybe things have changed. Well, if we know it's still going to be your permanent home, well, James, that's why then we're taking that down payment money that we told you to save because it's not going to make any difference in your interest rate right now. Whether you put down 3% as a first-time home buyer or 20%, hold on to those funds. Use those funds to make your payment over that next year, right? So you're using your own money. Then when that year comes up, we have a conversation. We take what's in there and what you were willing to do during this initial purchase. Then we do that forever loan, so to speak. Then we maybe buy, like we're talking about, James, on that refinance. Then we do that discount point, maybe 1.5 where now we're able to get that rate down into the low fives, high fours, something more permanent, something more palatable, if that makes sense. Something you could digest a little bit better.
I think it's interesting to see how much the incentives have flipped between when I bought my house last January and now, because there was no, marry the home but date the rate, because I was scooting in at 3%. So I was marrying my rate. And
Well,
so
not only that, the difference was you were competing with a lot of other people, right? So
yeah.
right now, they cannot, and everybody's starting to see our philosophy here, James. They cannot build enough houses to ever get us back to where it's a buyer's market, right? They can't build enough houses to get inventory where it needs to be. So when you look at existing home sales, they just had something come out yesterday, 12-year lows, right? We've been telling you this is going to happen. People aren't selling their houses. They're not going to. I'm not selling my house at 3% to go buy, to live next to, mother-in-law at 6.5%, 7%. So those are the things that we're dealing with right now. So it's a totally different environment. But that's why right now, by getting pre-approved with us, having that $5,000 offer, we were able to win this week because, number one, you've got people that are out there looking. They started to come out when those rates kind of went down a tad. Well, now they went back up. So guess what? A lot of people go right back into that shell because it's easy for them. When right now, with the incentives out there, what the sellers are willing to do, keep in mind that person that's selling more than likely has to sell. So it's a win for both people. Right now, more than ever, you should be more aggressive and ask for a little bit more than you normally would. Because what's the answer? No, right? So, okay, then you deal with it at that point. So totally different market. But our big pitch today is making sure that you understand the difference between a discount point and a buy down. And one of the contracts we won back on Saturday went to his credit union, and I gave the example the other day of a pseudo family member who went and got a 5% rate from a bank and a credit union. And guess what? All of a sudden, they go into contract and they send them over, and it was going to cost them almost $20,000 to get that rate. They left that off. They didn't advise of that. That's why when people call and go, "Hey, what are your rates?" I'm not doing that. We got to know a little bit more because this is what we're seeing, and it's so unfortunate because now you're not getting that. And you're not getting those 5% rates, 5.5 even, right? So now by going play that game, they cost you because now rates are elevated. So now what do we do? And those are the things that you're having to work with. So trust your gut, understand this is the value of, we've got several folks. Hey, if you out there, you're looking to purchase, get with us. You don't have a realtor, we'll help you with that. We've got a whole team. The Total Home Authority is here for you.
Do you see anything easing up on the insurance side? Because this is where I'm getting all kinds of complaints that None.
None. Zilch. Zero. They just passed that. They had that special session and they just threw up. They got approved. Donlin here, the state insurance guy.
Right.
And, if they go back a couple weeks ago, I had the queen of insurance, Colette, on. And she basically said, this is not a quick fix. 45 million is not, that's not even, that's like one rainstorm, right? So it's not happening anytime soon. That's why, again, just the difference in the last year of how you purchase a home is different, right? Because now it used to be people went out, looked, then came and said, hey, I'm under contract. And then the rate was, for 10 plus years, the rates weren't over 4.5%.
Right.
People could digest that. Now they're changing daily by 0.25%. So now on top of that, you've got to look at, what we got to look at. Now we got to look at, oh my God, insurance. We're limited on that.
Zone? What's the map look like? You got to go to some website and plug in the address, and it's in an orange area. That's bad.
But again, one of our buyers this week, James, we do that for you. You're not alone out there, Gumbo Nation. You're not expected. You're great at what you do in your career. That's why you hire us. That's why over the last 20 years and why we have the Total Home Authority. We are putting people in place to get you those answers so you know ahead of time. We don't want you to go get all excited about a house. You digest that, all right, I got to pay 7.25 for this house, right? And then you go find out insurance on a $200,000 house is $6,000. We saw that on an offer this weekend. So now, are we now going to negotiate that house, or are we going to ask them for money for a new roof? Right? There's so much. It's so different now, folks. And you just don't want to get caught, especially first-time home buyers. First-time home buyers, you have to understand you can't get it wrong on this initial purchase. You have to trust, but you have to verify. You get this wrong in the market that we're in, it's going to be an ugly situation for life. You may wind up having to stay in a house that you didn't mean to be in. So go to snapsendandsave.com. Go to mortgagegumbo.com. Hey, go check out today. There's an easy graphic. What is he talking about? Buy down versus discount. I put an easy graphic up there on the Gumbo Nation Facebook group. Hey, this Saturday, Florida Lee Law and Title, Jeff and Dawn, CEO and owner of Florida Lee Title, will be in studio. We're going to ask them about these title lock commercials, James. That we see all the time, right? About your house, they're going to steal your house, title lock. We're going to get that. We'll get some answers there.
I will go on the record as I'm very skeptical of these things.
Very, as you should be. But we'll get the answers from the pros this weekend. So any questions to home away from the show, mortgagegumbo.com or snapsendandsave.com. Give us a call. Come get that free $5,000 buyer guarantee that we have right now. You're listening to, look, take care. Thank you so much. Enjoy the rest of your Wednesday.